do we make of this harsh action in Domino's Pizza? It lost over 13% of its value last Thursday in response to its latest results. You know I'm a big believer in Domino's, but even though the company reported a solid earnings beat with inline sales, Wall Street was not happy with the guidance. See, management cut their international annual net store growth outlook while also suspending the global net stores forecast because of problems at their largest franchisee, Domino's Pizza Enterprises. So could this be your chance to buy a phenomenal long-term performer on weakness? Or maybe we need to be a little more worried. Let's check in with Russell Weiner, the new CEO of Domino's Pizza, to get a better sense of the numbers. Mr. Weiner, welcome back to Mad Money.
Jim, thanks so much for having me.
All right, I say new, but that's only because we haven't seen you that much. I'm so thrilled you're here because I think people want to know, is something awry? Because one thing I've said about Domino's, this is the most consistent story I follow, but I didn't know about the DPE, and I didn't suspect you to pull guidance.
Well, you're right on consistency. I started in marketing in 2010. We launched the new pizza, and you called us at $10. So thanks.
I got that right.
You did pretty well.
Well, that's because my kids love Domino's. And then you added the no cheese button, and they're vegetarians, so they're really fat. They're vegans.
Well, you know, we've been very consistent over the years. What I heard from investors when I talked to them after the call was the DPE thing was a surprise. Our job, Jim, as you know, is to provide only, positive surprises. We're supposed to be consistent. There was a miss there. We had to take guidance down, like you said, 175 to 275. I met Domino's Pizza Enterprises CEO Don May here in New York a couple of weeks ago. That's what our teams are focused on. So
that's more than 3,000 stores.
He's disappointed, yes.
But at the same time, that's not tens of millions of dollars that we're talking about. It's smaller than that.
But, Jim, we gave a number. Our job's to hit it. For perspective, though, on our international business, we've got 40 to 50% of our growth is coming from China and India. Right. China just increased their store growth targets from 300 to 350 a year. India and the 6 markets, Jubilant runs 5,500 stores a year. So when you're in 90-plus markets around the world, you're going to have some fits and starts and some. But the beauty is you have the other markets to round things out. Now, the other piece of information I got from investors was wow on this U.S. business. Right. Because, and you know this, you've been covering this, 4.8% positive same-store sales is a good number, but the quality of those sales are through people coming into our stores more. It's through traffic. Traffic in QSR now, folks are struggling because prices are a little bit high.
But we say it's not from price. You didn't raise price big and therefore hit the numbers. That's not what happened.
No. We like to think we have profit power. People talk pricing power. We price for profits for our franchisees, which means driving the top line. It also means really good value for customers. And I think that's why people are coming to Domino's now. Our value has never been better. So today's orders are tomorrow's sales. We increase orders on our delivery business, carryout business, every single income segment. I don't think anyone's doing that in our industry.
I want to put this DPE, this outfit, to rest, though. It's a publicly traded company. Why did you not get a heads up from them that there were problems? Why did we learn this on the day of earnings?
Yeah, well, they did announce the day before. The way our process works every year is we budget with our master franchisees. We actually had a pretty conservative number for them this year because last year was a little bit tough. We were working together in Q2, and it looked like Q2 wasn't going to hit. Teams got together and said, you know what, we got to say something as soon as we know, and that's what we did.
I got it. Okay, now let's talk about the things that I think are very exciting. Yeah. First, let's talk about you very rarely add something. When you do add something, it's a big deal. You added New York style. How's that going?
Yeah, it's great. Jim, I call it innovation with intent. Right. Sometimes you look and people launch products, you wonder, why did they do this? We launch about 2 products a year now with our new Hungry for More strategy. The question is why New York Pizza, not just we're launching.
MO or those each have that's an acronym.
Yeah, Hungry for more sales, more stores, more profit. How? 4 ways, right? Most delicious food. It's all about the products you launch and making them delicious. Operational excellence is the O. We're delivering 10% better than we were 2 years ago, right? Renowned value, that's why we're getting all these people in. Right. And everything we do is enhanced by our best-in-class franchisees. So the New York style pizza, we looked at our portfolio, and believe it or not, Jim, not you, not me, but there are some people who don't like Domino's pizza. Why? They're looking for something a little bit more thin.
Understandable.
And so this is a great product. for those folks, and we're bringing incremental eaters into Domino's Pizza.
Now, younger people are telling me the offering $3 U-tip, we-tip promo matters again because people are pinching.
Yes.
They're pinching dollars.
Yeah. You know, the R in Hungry for More is about renowned value. It's not just value. It's not just a price point. It's value that people talk about. And so all U-tip, we-tip is, it's a $3 bounce back. You buy pizza, you get $3 next time. That's boring. That's not renowned value. But everyone today is pretty frustrated. I was telling you a story earlier. Someone bought a chapstick the other day and was asked to tip for the chapstick. Right. And so we kind of just changed the messaging and said, hey, let's call it U-tip, we-tip, but the mechanism's the same. Everyone's talking about it.
Now, we had an outfit called 100X, and they were on, and they measure customer satisfaction. And you had the highest customer satisfaction in your segment. But they said, look, some of this is just because it's the price value.
Yeah.
It may not be the super best tasting, although, you know, I happen to love it. But the fact is that you're offering something that seems to be reminiscent of before COVID, before things went crazy.
Yeah.
True?
Yeah. Well, the way we look at value is not just price. It's an equation, right? The price is the denominator. The benefits are the numerator. So what else can you give people? So one of the things I think is great about our price points is you can use our national promotions on any item. That's a benefit. Right. It's not just the pizza. It's sandwiches, it's pasta, it's salads, it's desserts. Most people now are getting a little bit of whiplash. Prices are higher. Right. Now, discounting's coming maybe on a certain item. Well, Jim, you may not want that item. At Domino's, you can get anything you want for our national promotion. And those are benefits. We feel like the more benefits, loyalty program's another one, that we can put on.
Are we over 30 million? We're somewhere.
Well, I can confirm we're definitely over 30 million, but we'll give an update at the end of the year. We changed that program to get more frequency from our light users and our carrot users, and it's really working.
Well, look, my takeaway is the first thing you said, which is we're not used to getting anything other than positive surprises. Obviously, you're hungry to never have, again, a negative surprise, even though it was international and not necessarily under your control. And even though I don't think it was $10 per share, it was something that you're not proud of, and you're not going to let it happen again.
Nope.
Well, that's all that matters to me.
Yeah, and focus on that U.S. business. You'll see at the end of Q2, this was a really special quarter.
Excellent. Yeah. That's what I want to hear. Russell Weiner is the CEO of Domino's Pizza, DPZ, and you heard it right here. They have money's back after the break.
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill. Booyah, booyah, booyah.
Thanks for taking my call.
It strikes every day. Cramer is back in a flash with your questions. Next.